first quarter of this year, we had $16 million of free cash flow. Second quarter, we had 146, and it's only going up. We're in the early innings, right? We're just now going to start seeing these higher prices flow through in our financial results. These stocks aren't overvalued at all. In fact, you plug in current spot prices into our model or into any company, and stocks are cheap on that basis. I keep asking all these experts, like, what's the bear case? What has to happen for this to all unwind or reverse? And, on the silver side, it's a hard case to make.
Well, greetings and welcome to our Wealthion show. This is Trey Reik, and we're at the SCP Wealthion Silver Conference in Toronto at the Shangri-La Hotel. And my first visit of the day is with Mitch Krebs, the 14-year or so CEO of Coeur, used to be Coeur d'Alene for folks like at my age, but now Coeur Mining. So thanks for joining us. I appreciate it.
Thank you. It's good to see you, and thanks for the invitation.
Certainly. So I think any discussion of Coeur really needs to start with the relative position of your company in the pantheon of silver companies, both in terms of deposits, resources, and profitability.
Yeah. Well, the company goes back 98 years, and a proud silver company, from the Silver Valley of North Idaho. That's where its origins are from. In terms of global production now, we're about 20 million ounces a year on a run rate basis. That puts us in sort of the top 5 global producers. What makes us unique, I think, is the fact that all of that production is in North America only. We're not in any far-flung countries. Company used to be. So 14 years ago, the company was in Bolivia, Argentina, Chile, Tanzania. It was stretched around the globe, and we really didn't feel like we had any reason to be in all those locations. So we really scaled ourselves back to just North America. So 2 mines in Mexico, 3 in the U.S. 3 of our 5 mines produce a healthy amount of silver, which adds up to that 20 million ounces or so. So in terms of U.S., our Rochester Mine in Nevada is our largest at about 7 million ounces a year. It just finished up a big $730 million investment in a big expansion. So it's going to be producing a lot of silver for a lot of time out there in Nevada, which is the silver state. And it actually makes Rochester the country's largest source of domestically produced and refined silver, which I think is becoming more and more important in the world we're in.
Terrific. And what percentage of production and resources is on the gold side?
So gold right now is about 60 to 65%, with the rest silver, no base metals.
And is that going to stay the proportion over the next several years, or are you trying to change it in any way?
Yeah, so the SilverCrest acquisition that we just completed in February brought us the Las Chispas silver and gold mine in Mexico. So that helped bump up that overall proportion that silver comprises of our overall business a little bit higher than before. We want to always be a meaningful silver producer. Our investors look to us for exposure to silver. Now, what does that mean in terms of a percentage? I don't think it's necessarily a fixed percentage. I think meaningful, what does meaningful mean? Probably more than 20%. But I also think on the other end, silver is a very volatile metal, and it's hard to run a business when the price of the product that you manufacture fluctuates by 20%. So I think having gold, which is a little bit more stable, is a good mix. So I think somewhere between kind of that 20 and 50 is always somewhere that we want to stay.
Just for viewers' reference, we did a silver letter ahead of this conference, and we took the Silver Miners Index, the Selective Index, and screened for 500 million in market cap and 20% silver revenue. And believe it or not, in the entire world, in the 38 names in Selective, there are only 15 that qualify. And in that 15, the percentage of silver revenue is below 50. It's 48. So your range of 25 to 50, just for folks watching, is pretty typical with what we call primary silver producers.
There's not a lot of us.
Right.
And in fact,
95 billion total market cap, the entire group of 15. Which I will point, last year was 36 billion, because when I updated the letter,
Oh, wow.
everything's done pretty well over the last year.
Well, you raise a good point though there, that in the last year, you've seen 3 of those companies change hands. Right?
Gatos, SilverCrest,
Crest, and Mag.
with Pan American.
And so now when you look around at sort of single asset primary silver companies, there's really not any.
So I was going to bring up SilverCrest later, but let's jig to the side for a minute. One of the things I always like to ask folks when acquisitions are made, we all know in the mining business, when you buy something, you have a perception of what you're buying, and then you buy it, and doesn't always match exactly what you expected was there on a number of levels. So it's still early, but are you pleased that you got what you thought you purchased?
Yeah, of course, to your point about the market caps change, the silver price changing so much, the amount of money that Las Chispas is making is so much more than what we had in our transaction model.
That's which is great,
right?
Tailwind.
Yeah, I'd say the people, we had a sense that the cultures were very aligned, but what we have found is the people there are so solid and so eager to be a part of the larger company. They see opportunities for growth. They're just like sponges, and they're throwing off great ideas that we're taking elsewhere in the company. So that part's worked out really well. The transaction closed in February, so here we are in October, and we've sort of declared victory on the integration being behind us at this point. So that took a lot of planning and a lot of focus by a lot of people, and so that has gone as smoothly as we could have hoped. That's for being such a new mine, the team is very solid and they have just a great handle on the business. And that's why when we came in and we said to them, look, we want you just to keep doing what you're doing. And even though this is only year 3 of Las Chispas being in operation, that says a lot about just how the quality of the business, the quality of the people that led SilverCrest, Eric Fier and his team and that board. They have great people, they had great command, they have a great command of that deposit and of that operation. They learned a lot very quickly, and it shows in the results. Of course, that kind of grade, you can make a few mistakes and still make a lot of money. But so far, it's been very smooth.
So, and for reference, you kept most of the operating and management team?
Like everyone.
Okay.
Yeah.
100%.
Yeah, I think the only real change we made is we brought somebody from our Palmarejo mine over in Chihuahua and installed them as an assistant general manager. Otherwise, that's the only. And I think since the acquisition, I know of only one person who has left Las Chispas.
Excellent.
That's a good sign.
So, and are there road signs for the rest of this year and next year specifically at Las Chispas?
Yeah, a couple of things. One, we only have it this year for 10 and a half months.
I understand.
And at that kind of grade and at these kind of prices, that extra 6 weeks makes a big difference. So, you fast forward to 2026 and we'll get a full year. That'll be a nice boost for the overall company. But what we want is, consistency in the 10 and a half months that we have it this year, carry that over for a full 12 and we'll be in great shape. The other piece is on exploration. Las Chispas sits on a fairly constrained land package. But when you have that grade and in such a tight epithermal repetitive vein system, you don't need a big land position. As long as you can keep finding new veins and extending existing veins, and that's going to give you the opportunity to keep replacing what you produce. And for this first year out of the gate, what we want to do is just demonstrate an ability to replace what we produced, maintain that kind of 6 or 7 year mine life that we inherited when the acquisition closed, and just keep, steadily moving ahead. You never want a super long mine life at an underground mine. It's just too cost prohibitive. But if we can keep reinvesting, keep extending, keep, just sticking in that existing land package that we have. And there was a release we put out last month, chock full of great results that we're already generating from inside that existing footprint. That exploration piece is the other big part of the focus there.
So talk a little bit about that before we move on.
Yeah, well, new discoveries already. Augusta is the name that comes to my mind first. That there are about 3 or 4 blocks there at Las Chispas. The Bobby Canora block is the main area where they've been mining since the mine started up now a little over 2.5 years ago. But just north of that is the Las Chispas block, which is less explored. We're having great success in there, but what I think is pretty cool is in between the Bobby Canora block and the Las Chispas block, what we call the gap zone. We're hitting some new mineralization in there. So
as an indication, what's your drill budget for 26?
For 25 this year is 18 million. I think the SilverCrest team and their budget that they approved last December had about 14 or 15 million. So we've increased it a little bit, and we've moved it right back to the mining area itself. They had some regional targets they wanted to drill this year. We sort of moved that money back to the mine area itself. So
the area between the 2 zones, or
really
area?
All of those 4 blocks.
Gotcha.
But then now in this zone, in between this gap zone, is an area where we'll be spending some more money, and all of that is right near existing infrastructure.
Have you had any holes there yet?
Yeah.
And what was the highlight?
Gosh, I can't give you the exact meters and grades.
But we're in double digits.
Oh, geez, yeah. Higher grade than expected.
Good. So, and before we leave Las Chispas, did the acquisition of SilverCrest take you to 33% silver, or is that the starting point and it'll go up more next year?
Well, Las Chispas is about 50-50 between silver and gold.
Oh, so it doesn't change the average that much?
No.
Okay.
Just depending on where prices are, you might see a little bump. But just before we leave Las Chispas, just the other piece, and I get asked this a lot, is just Mexico. We thought long and hard about adding a second mine in Mexico. Right, we've been there since 2010 at Palmarejo, but with AMLO leaving and then Sheinbaum coming in last October, which is right when we announced this acquisition, the question was, well, is Mexico going to get better? Is it going to get worse? More of the same? And fast forward to today, it has become a much more pro-mining, at least in Sonora, and at least at an underground existing operation like Palmarejo and Las Chispas. We had permits that sat for 6 years under the AMLO administration without moving 1 inch that have now been issued in the first 6 or 8 months of the new administration. There's still some questions around open pit mining and permits for that. But as far as silver, gold, underground existing, where you have good community relations, a good, happy workforce, we're having a much better time now than we were under the prior administration.
And most importantly, your worst fears have not materialized, given the permitting uproar about a year ago.
Security's fine. There are still some challenges in Mexico. Don't get me wrong; it's not a total bed of roses, but it's played out much better than what we were afraid it might with the new administration coming in last October.
Excellent. So before we go to the other properties, I want to back up to where we were introducing the company generally, and I always like to ask the Rick Rule question, which is, how do you define, or how would you précis the mission of Coeur? What's the corporate mission? Well,
we frame that up with 3 main values, and that's produce, protect, and deliver. And those are really the drivers of who we are and what we're trying to be as a company. Our mission statement is, we pursue a higher standard in everything we do. We go above and beyond. Like I said in my talk, we're the safest mining company in America the last 3 years.
By the way, what's the definition of that? Zero hours, or
that is a
percentage of hours?
That is your total reportable incident frequency rate, as reported to MSHA in the U.S. So all U.S. operating companies report to MSHA, and we're the lowest of them all.
Well, congratulations.
3 years in a row.
That's a good category to be.
It's great.
So,
on. That protect, and that's not just, for people, that's the environment, that's the communities, that's the bedrock, right, of the company. Develop and deliver. If you're not developing new resources and new reserves, new plans, you're going to run over the edge of a cliff, and then deliver, right? You've got to deliver results. You've got to do what you say you're going to do. You've got to get the trust of investors and of everybody, that you've got the credibility to do what you say you're going to do, which in this industry, sometimes that's That's a challenge.
Yes, I've been there. And then the last general sort of introductory question about the company, I think it's fair to say that the core of 6 years ago is very different from the core today. That's been sort of a 5-year process, as you just spoke about earlier. Can you just give us a précis there about what you've accomplished in the 5 years and why Core is a different company today?
Yeah, and even going back 10 years, this company was like a house built with no foundation. And what we've done over the last decade is we've taken the house, moved it, built the foundation, and now put the house back on top. It's a much stronger organization. It's a much more resilient business. And you're right in pointing to about 5 years ago. That's finally when we got the team in place, where one of my big aha moments in this job was about 5 years ago, when you get the right people in the right seats, you have trust, you're aligned around where you're trying to go, and then in my role, it's get out of the way. Cheer from the sidelines, maybe remove a barricade or a blockade here and there, connect a dot here and there that somebody might not see. And if there's a tough call along the way, I'm there to help, but otherwise let it be about them, and realize that team can do things way better than I could do them. And the best thing I can do is stand back and let them achieve. And that's about exactly when this business really started taking off.
This October, Wealthion's putting the spotlight on silver with expert interviews, deep analysis, and a special in-depth report from our partners at SCP Resource Finance. To receive this report and other exclusive benefits, you can sign up to become an accredited investor with Wealthion at wealthion.com/accredited, or by finding the link in the description below. Speaking of silver, Wealthion will be on the ground in Toronto for the SCP Resource Finance second Global Silver Conference. Legendary investor Eric Sprott headlines the event alongside 15 silver mining companies presenting their top projects. Find out more in the description below.
By the foundation, do you also mean geographically, or you were speaking much more from a corporate culture?
I'd say kind of all the above. We did a headquarters move out of Coeur d'Alene, Idaho to Chicago in 2013. Of the 65 people that we had in Coeur d'Alene, only 6 came to Chicago. So we literally started with a blank sheet of paper and started with organizational structure, incentive systems, all the processes we started. It was like a startup. It's
all the fun management stuff.
Oh my gosh. And it took a lot longer than I ever thought it would. And I certainly didn't get everything right the first time. I had to take a few swings at the plate, especially on the team piece. So it is culturally, the assets, we turned over a lot of the asset portfolio, got out of a lot of places, like I mentioned, a lot of countries, a lot of jurisdictions, a big board transformation over that period of time as well. So it's really been the assets, the organization, and the culture.
So the acquisition of SilverCrest is obviously the cherry on the top of the growth story, but Rochester is sort of the core of the growth story. Would you agree?
Yeah. Yeah,
So
I think that's fair.
Can you give us a précis of Rochester and what you've invested and how you see that paying off?
Yeah. So Rochester goes back to 1986. It's an open pit, heap leach silver gold mine. About 2/3 of the revenues from silver, 1/3 from gold. It sits in northern Nevada in Pershing County, just outside of Lovelock, Nevada, not far off of Interstate 80, about an hour and a half outside of Reno. Historically, Rochester produced 3 to 4 million ounces of silver a year and 35,000 ounces of gold a year. What this expansion has done, which was a $730 million expansion, started off in the middle part of 2020.
By the way, where'd you get the money? I was wondering
Yeah,
when
yeah.
you were speaking earlier.
Couch cushions, you name it.
Offerings?
We raised some equity. We leaned heavily on our balance sheet. In fact, if you look at there was a slide in my talk this morning that showed where our balance sheet was 3 or 4 years ago as we were going through that heavy build out. And we were very levered. And there was a lot of investors, for good reason, who were taking a wait and see.
What metric would you point to? Debt to equity?
I would say our net debt to equity it peaked out at about 4.5 times, which in an industry like this, you don't want to be anywhere close to that.
Right.
And that was white knuckle time.
And where are we
us.
today?
Now we're at the end of the second quarter, we were at 0.4 and dropping, quickly.
Incredible.
In fact, I think I said on the call that by the end of the year, we should be in a net cash. So we'll have more cash than debt.
Excellent.
So that used to be a long-term goal. Now in this environment, long-term goals are becoming short-term goals.
All we're going to do is raise the bar and expect more from you. I don't think you're going to get congratulated.
Yeah, it's like the share repurchase program, right? We now, instead of issuing equity, we're buying back equity and trying to, kind of come full circle on that. And of course, we launched a $75 million repurchase program in May, and investors were happy for a couple minutes, but then the question was, well, why isn't it more?
The gold guys want you to reinvest that, money.
Well, yeah, and
it's
then
hard. It's a hard balance.
It's got to find.
So
that
back to
balance.
Rochester, I interrupted you. What do we expect in the next year or two? What are the goals?
Yeah. So now, post expansion, instead of 3 or 3.5 million ounces of silver, it'll be more like 7 to 8 a year. Gold, instead of 30 or 35,000 ounces a year, it'll be more like 70. Because of that higher throughput and just all the efficiencies with that higher scale, costs come down about 25%. So the cash flow is, 150 million, or probably at these prices even more. And there's a 16-year mine life out ahead of us based on reserves only. Of course, as you can imagine, we've been there since 1986. We've methodically kind of expanded the land position around Rochester, so we have plenty of places to drill. We just need to now start allocating some of that cash flow to exploration. We've been so focused on completing the project that exploration hasn't been at the top of the list. Now that'll become more and more of a focus. And so Rochester is going to be, really a cornerstone along with Las Chispas as far as driving the future. And what's exciting in the near term is 2025 is a year where we're still ramping up that big new crusher. I mean, this crusher, when I say big new crusher, it's over a mile from where you dump ore in to where it goes out to the leach pad. It's over a mile long, 11 stories high. This thing is it's amazing, the scale. But we're still, tweaking things and fine tuning things. But my point is that as we get into 2026, we're going to see even a further step up in the performance out at Rochester. So between the full year at Las Chispas next year and then more of a steady state year at Rochester, we're set up for some nice kind of organic growth in 26 versus 2025.
And in the other 3 operating mines, what would you highlight?
Yeah, well, each has their own specific story and kind of capital allocation themes. I think Wharf is worthy of mention because it probably doesn't get the attention that it deserves for being such a terrific contributor to the business. We acquired Wharf from Gold Corp in 2015 for $99.5 million. It had a 5-year mine life. Wharf's been around for 42 years.
Where is it?
It's in the western South Dakota. It's in the Black Hills.
South Dakota.
Like Mount Rushmore, Deadwood. It's an amazing part of the country, and we're really the only game in town. That's where the old Homestake mine was.
Bob Quartermain's trying to get going.
Yeah,
up there,
they're a
right?
neighbor of ours, Dakota.
Dakota,
Yeah, exactly. And so Wharf produces 80, 90, 100,000 ounces of gold a year, generates a significant amount of free cash flow. In fact, since we acquired it in 2015, we've taken out over $500 million of free cash flow. It still has about a 5 or 6 year mine life, the same as when we acquired it. We're investing more in exploration now, and we think we have a chance at getting that mine life out to maybe even double digits. So Wharf is going to keep on giving, and it's the greatest contributor to our return on invested capital, ROIC, which is a metric we keep a close eye on. You can invest about $3 to $5 million in exploration at Wharf in a year and replace that year of production, which is the equivalent of $75 million of free cash flow. So investing 3 to 5 and getting back 70 or 75, that's not a tough call, and it's really helping to drive that overall company ROIC number in the right direction.
As you've been talking, I've been trying to think, why did you buy it so cheaply? And I think it was because it was 2015, correct? We just had 4 years of a catastrophic move, and gold was down about 50%, but the stocks were all down about 80 to 85%. So
gold was, I think, 15, maybe even a little under $1,500 an ounce. Because Wharf is such a historic property, I think some potential buyers were scared off by future reclamation or closure liabilities. One of the things about being a longtime U.S. mining company is the company amassed a huge amount of U.S. tax loss carry forwards. So for us, an acquisition like Wharf, we don't have to pay any taxes in the U.S. And so that made us, have a sort of inherent advantage over most
of other operators.
Okay. But for us, putting $99.5 million out on the table for Wharf was a
I bet at that time it was a gutsy play.
Yeah, and now look, here we are.
And then the other two, Kensington and I'm embarrassed. Palmarejo. Didn't know exactly how to pronounce that.
That's okay. Palmarejo is a great story. Produces about 6 million ounces of silver a year and about 100,000 ounces of gold. This is, I think, its 16th year in operation. It's in the very southwestern part of the state of Chihuahua, so it's out in the Sierra Madre Mountains. They do an incredible job of delivery every year. They're very consistent. They're great operators. Probably the big story there is when Palmarejo got built, it was right in the middle of the global financial crisis. I was the CFO at the time, and we were trying to scrape together the money to finish that construction. And about the only phone call that I got returned was from Franco, Nevada. And they gave us the money to finish that project, but they took back a very attractive
This is the
gold
$800 stream.
So 50% of the gold we produce at Palmarejo, we sell to Franco, Nevada for $800 an ounce. Today, that really hurts, right?
That's why Pierre is Lucky Pierre.
Yeah. Well, so what we've tried to do about it, we did renegotiate it once in 2016. But what we've been doing is methodically consolidating the land position off to the east outside of that area that's covered by that Franco Nevada gold stream with the aim of creating some new mining areas where we can mine and then haul back to the plant and process and sell and receive the spot price for all that gold. And so this year, over 60% of our exploration budget, Palmarejo, is off to the east, and that'll be a continuing theme. And kind of that next chapter for Palmarejo will be over there. And there's a lot. It might not be a big source of production growth in the future, but it's going to be a great source of margin and cash flow growth the more we mine over there.
And just because Pierre needs more plugs, it's a great statement to the optionality of land for viewers in terms of royalty companies. It's a very good example of where the leverage comes from in royalty companies. It's not always obvious from a superficial point of view in a short-term financial report, but this is a good example where that optionality is very powerful.
And we wouldn't have Palmarejo if it wasn't for them, and they have been a great partner, and they took a risk, and they've been rewarded for it.
And closing out, Kensington.
Kensington took 18 years to get permitted, including a trip to the U.S. Supreme Court. Finally was built also at about the same time that Palmarejo was being built. Not good planning in terms of a company this size at that time, trying to build multiple projects on top of each other made my life as the CFO very interesting.
You were the CFO back then. That's even worse. The pressure is all on you.
Yeah, exactly. But it got built in 2010. So it had an 8-year mine life when it started. The mine life got down to almost 2 years in 2022. And there was the value of fresh perspectives and fresh eyes. We brought in, that's about when we brought in, to your question earlier, about 5 years ago, a new COO, a new head of exploration, fresh perspectives, brought a renewed sense of optimism about Kensington. We invested then over 3 years, about $85 million in drilling and underground development, and the place is really now opened up. We've got a ton more of underground operational flexibility with all that development that we've done. The drilling's been successful. We have a 5-year mine life now. It produces about 100,000 ounces of gold a year. It's now contributing free cash flow. I mean, these prices obviously help, but if we hadn't done that investment in Kensington, I don't know where Kensington would be kind of a push. But now Kensington's a great contributor. They really are hitting their stride. It's a beautiful part of of the world up there in southeast Alaska, just outside of Juneau. But it's remote. It's a campsite. Everything is barged or boated in and out. But they're now really hitting their stride.
So it would be fair to say that you have enough on your plate for the next 2 years that we shouldn't expect you digging your toe into the M&A realm.
Well, I would say we're always looking at things that could make the business better. Even though Las Chispas came in with such high grades and low costs, it helped move us a little bit down the cost curve, but we're still hanging out up there in the higher end of the cost curve, not somewhere you want to be through the cycle. And this company historically was known as having a bad balance sheet and high costs and short mine lives, which is not any way to live life. Higher prices can mask some of those things, but it's called a cyclical business for a reason. Prices will not go up forever. And anything we can do to help build a more resilient, a more durable business are things that we need to take a look at. Now, we don't want to get back into the big capital project game again. We just got out of that. Our investors want cash flow and a better balance sheet, and so do we. And that's where we're heading. But anything that we could find that could help reduce our costs, supplement that cash flow, stay in our jurisdiction, stay within our metals that we currently produce, and not deviate from that overall strategy.
No rare earth projects on the blackboard?
No. As much as you kind of wish you had some of that somewhere. But
so you mentioned the cycle. So we'll close, please, with putting you a teeny bit on the spot, because no one in your position likes to do this. But there's the big question on most investors' minds, given the performance of silver and especially silver equities. Even your own stock has more than doubled since August, right? It went from 10 to 23, and I think we're still at 21. So, it's sort of a related question. Is it too late? Where are we in the cycle? How far can it go?
Yeah. Of course, you'd expect me to take the bullish side of that, but I think it's pretty well founded. I mean, just focusing on silver, from my seat, I see a lack of investment. There's not a lot of new supply, and the rare project that is coming online in the next few years, there are other older projects going away. Mine supply peaked
like 5 years ago.
Yeah, I was going to say 7 or 8 years ago. Maybe it was 5, and it's not coming back anytime soon. And then on the demand side, you have this industrial demand, and now, of course, this investment demand. I remember in 2011 when I got this job, prices that's when silver last kind of made a big run. And I remember one of my biggest questions at the time was, what are we going to do with all this free cash flow that we're generating? That was like at the top of my list of dilemmas. And then, a year later, silver and gold had both come down quite a bit. But when I look back at what the supply and demand of silver looked like back then, we were in a surplus every year. Now we're in the 5th year of supply and demand deficits. It's going to continue. I mean, these are the things that we've been talking about in this industry, and nobody would listen for a long time around growing demand, more industrial demand, electronics, photovoltaic, no new supply, inventories depleting, annual deficit. Guess what? Economics works, and here we are with the supply and demand, and I don't see, I keep asking all these experts, like, what's the bear case? What has to happen for this to all unwind or reverse? And, on the silver side, it's a hard case to make.
Yeah, the industrial demand is a very firm floor.
It's a very firm floor. Now it's 60%. When I first started in this business, it was 35 millimeter film that was 30% of total demand every year. Now that's like 3 or 4%.
Zero.
And it's all electronics, electrification. And, nobody can make a good case for that stuff going away.
And we have the AI cherry again on top, which could be huge. Of course, no one really knows, but it could be really huge.
Oh, these data centers and all the electricity that we need. It couldn't be better for an electrical metal like silver. But I think, where are we? You asked, where are we in the cycle? All I know is, look, first quarter of this year, we had $16 million of free cash flow. Second quarter, we had 146, and it's only going up. So I feel like, to use them, since we're in Toronto, World Series, Blue Jays, we're in the early early innings, right? We're just now going to start seeing these higher prices flow through in our financial results. And then when you look at these long-term consensus prices, gold, the long-term consensus price is, I think, $2,600 or $2,800. And I think for silver, it still starts with a 2. So, as those continue to kind of catch up to reality, I think we're going to see that these stocks aren't overvalued at all. In fact, you plug in current spot prices into our model or into any company, and stocks are cheap on that basis.
And of course, you can't comment because I think you're probably in a blackout period after the quarter. But it seems, I believe, gold's rise. I'm a little surprised that you haven't seen earnings explosions yet. Like, I could go through by the year 2024, first quarter, second quarter, third quarter, but generally, I think you would agree it's very likely that we're going to see across the board very strong earnings growth in the next 2 to 3 quarters. Wouldn't you?
That's what the sector is saying. I think companies in our sector start reporting even today. So we'll see. I mean, we certainly have telegraphed that our second half of the year, a bit of company-specific production growth, for sure, but with these higher prices, the full year free cash flow number of over $500 million and EBITDA of $900 million. When I think I said it in my talks, just 24 months ago, we were $142 million of EBITDA. Now we're going to be over 900. We were minus $300 million of free cash flow 24 months ago. Now we're going to be over 500 million. And that's just really hitting now. And that's only going to continue into the second half. And like I said in there, if you like the sounds of those numbers for 2025, just wait till 2026.
That was a good answer, so I'm going to let you off the hook on a silver price target.
Oh, good. All right. I worked my way out of that one. No, I enjoyed it. Yeah, thanks,
We
Trey.
look forward to checking back in a few months, see how you're doing.
Yeah, that would be great. Thanks.
Terrific.
Appreciate it.
Thanks.
Yep.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. With markets hitting all-time highs, now is a great time to stress test your strategy and be prepared for what comes next. Thank you all for watching. We'll see you again next time.